you had mentioned that, the acquisition, of Mayfair was, kind of the start of this Pan-African strategy, this Pan-African move. I'm curious if there's any, insight or knowledge. You don't have to tell me anything not unannounced. We are a media company, so we'll be obliged to run it. But, about, maybe some of the next steps after CIB Kenya.
Okay. So I think for us, the first thing is to stabilize the CIB Kenya business model. Mm-hmm. So for what we have done that, I'll give you a few things when you spoke about what's the kind of support coming in from Egypt. So we are already firstly, we are very clear, we are here to stay, right? So we are now investing in the best in the world digital technology stack on the core banking side. So we run on a Temenos stack back in Egypt, T24, and we are now replicating that stack here in Kenya. And Kenya becomes a hub for us now to pan into the rest of East Africa and then beyond that.
Okay.
Right. Okay. And similarly, we have a digital factory back in Egypt. We are upgrading our digital banking stack. We are upgrading our internet banking, and we've introduced something called the share services model, where there are learnings both ways, right? Because for me, I think I worked with multinational like Citibank and some other banks, UBA, EcoBank. For me, I think it's a question of you have a success story back there in Egypt. You have a ready, or I would say, a half-baked product, which has been a success back in Egypt. For us now is to just bring that half-baked product, put it in an oven here, blend it with the local spices, and serve it to the customers. Okay. And I'll give you an example of that, is that one of our largest successes back in Egypt is we don't do asset-based lending. We focus on the customers, especially SMEs and large corporates. We on their cash flows.
Really?
Yes. Okay. So for me, it is not that if you have an asset, and I'll give you an example of that and why some of these SME models fail, is that there is a budding SME, and Africa is huge. The backbone of Africa is SMEs. This SME now wants to borrow. He has good cash flows. His product is selling. He's revolving his working capital, but he doesn't have assets. Yeah. How do you fund the guy? I am willing to now fund that guy based on debentures or whatever, use different instruments to fund him and base it on his cash flows.
Okay. Right? Interesting.
And we currently have, in fact, to be truthful to you, on a portfolio the size we have in Egypt, we have sub 2% delinquency.
Wow. Okay. Interesting. I think we'll have to talk after this about how we can work together as the Kenyan Wall Street.
Absolutely.
Because I know I have definitely gone, I won't say my current bank, but I've definitely gone to the bank, and even despite, very good cash flow and provable cash flow, contracts, invoices, and everything, even if I asked for 200,000 shillings, which is, it's really not that much for a company like mine.
Yes.
People are gonna
ask you some major questions and ask for some assets.
We need the title of your car. I was like, it's 200,000 shillings. All right. Well, that's really interesting. And I'm curious on that side as well, cash flow based lending. How unique is that in the Kenyan market?
Very unique in the Kenyan market. In fact, I would say Sub-Saharan Africa, I spent 15 years of my career in Sub-Saharan Africa. One of the reasons why the banks are they shy away, the big boys especially, they shy away from this kind of a risk-based, models. They're more into asset-based. And I think one of the biggest, I would say, bane of NPLs in Kenya and the rest of Africa is because of this asset-based lending. Because I would rather lend to a vibrant cash flow business, rather base my whole lending philosophy, right, onto an asset, right? Because that business can go bust, and then I'm running all over the legal system, to sell those assets.
It seems incredibly complicated to do just asset-based lending, and I feel cash flow overall is a better proof that you can pay it back than the fact that you have an asset. I mean, imagine if you got a government tender to pave a road, many years ago. So you bought a very nice, LX 600, it's nice, but you don't have any tenders or any revenue coming through now.
Yes.
So the bank's going to get your car at the end of the day.
Exactly.
And they're going to spend a lot of money in going through the courts as well. You had touched on the technology stack that you're bringing in. And to be honest, I had told you that I've done a lot of work within the fintech industry. I sit on the board of the Fintech Association in Kenya and such. So I'm curious, what exactly, are you bringing in with that technology? And then how does that compare with other banks here in Kenya? Because I know a lot of entrepreneurs like myself have had issues with, hey, maybe you took a work trip to New York or LA, all of a sudden things aren't working and they're like, oh, visit a branch. Yeah, I'm in Los Angeles. There's no branch here.
Exactly.
So I'm curious, what exactly will that technology do and how does it compare with the rest of banks in Kenya?
So just to step back, banking, especially core banking, the old historical stacks like what we have currently is, Finical or FlexCube runs another one, FlexCube or these stacks. These are old generation, very stubborn stacks because these are hard-coded, right? Even to connect an API to them is a challenge, right? Whereas the one we are bringing in is Temenos T24, which we operate on in Egypt, right? Which is a digital stack. And the advantage of digital stack is that anytime you need an upgrade or you want to enhance it, you can it's like putting one block over the other.
Yeah, it's like Legos.
Yes, exactly, exactly.
Okay.
And, this also gives us an edge because we can now very quickly enhance our digital app.
Okay.
Right? We can relook at our digital banking, and it makes it much easier. At some stage, as I said, that I am a great fan where say, okay, brick and mortar in Kenya or in Africa is not the greatest model to work for. In fact, one of my previous employers, I was hated for closing some 700 branches. Right? Because it doesn't work out. The whole dynamics, the cost of real estate, the cost of people, the cost of generators, the cost of security and the works, right? Imagine having a branch down in Malindi, right, with the real estate and everything. I believe in the model. You need to establish your brand. You need one brick and mortar where your brand is recognized, because the customer in our emerging market specifically still want to see something on the ground. But so when you want to bank with a bank, you want to go and probably open an account and feel comfortable. But after that, you probably will not want to visit the bank. You need the best of state-of-art digital app where you can transfer money, you can operate, you can do whatever you want to do. So this kind of a stack helps us do that.
Okay, interesting. And based on your previous answers, I can kind of guess the answer to my next question. But it's involving, customer experience, customer engagement.